Now, how can you go about creating a side business where you can possibly make a minimum of $4,000 a month? This is for anyone out there who has a full-time job and is looking to start trading, especially in particular the future markets. Now, I trade the actual indices or index markets, like the NASDAQ futures, the ES futures, also commodities. So there are various asset classes within the future markets that you can trade. So you can actually create your own side hustle by doing this each and every day. Just taking one trade a day is what I'm trying to say. Now, and that's trading the E-minis. Now, if you trade the micros, which I do recommend for anyone out there who's starting off their own, venture into trading the future markets, you can do so just as well as a beginner trader. So I'm going to show you, we're going to look at some numbers first because you're probably saying, well, how is that possible? All right. It is definitely possible, guys, and I'm going to show you a strategy that I use each and every day that you can use yourself, okay? I'm not going to make any guarantees to anyone because trading is risky. You should know that by now if you're doing your own homework and doing your research. But I'm going to stop right now and say this. The number one thing that you want to be able to understand and master if you are looking to create a side business, okay? And it won't happen overnight, but it is a way to make a good income in addition to your full-time income, all right? So let's talk about the math first and foremost. Again, market structure is the key. Please take that term, let it resonate, and do your homework on it and do some research, whether you're watching my videos or here on my channel or maybe somewhere else. But I'm telling you for sure that that's where you really need to start with. Got to master that concept. Now, I do have a great video to anyone who is an elite channel supporter. You already know. For anyone that's interested, the link is down below, but there's a great video there where I cover market structure, all right? And the membership there is only $6.99 a month. That's all it is. Most people spend more than that on price a cup of coffee per day, okay? So if you add that up, maybe $50, $60 a week on coffee or breakfast sandwich or whatever you spend your money on weekly as far as, substance for your means of for your body, okay, whether it's lunch or whatever it may be. But I'm here to tell you that we have had successful people that have come and be part of this group here by simply becoming elite channel supporters. Now that's up to you if you choose to or not. At the end, I'll kind of go over what's included with that actual membership, which is a part of a YouTube tier membership program that allows creators like myself or content creators like myself to offer. It's basically a perk, a reward. Rewards that we give back in return. So I'm going to talk about that here as far as on my channel. But anyways, getting into the video here and talking about the business of actually trading and how you can do it part-time as a side hustle. So first and foremost, you got to understand the structure of the market, what we're doing. We're making higher highs and higher lows. Now the math portion of that, it basically breaks down to be $200 a day, okay? So you say, how can you possibly do that? Well, if you know anything in particular, just to say the NASDAQ, because that is primarily the market that I trade on most days, because there's lots of movement, volatility in that market just as well, and you have multiple opportunities to actually trade this market. So, and it trades at a tick value of $10 a tick. So there are 4 ticks in every point on the NASDAQ. Okay. So, and I tell a lot of people, the aim is probably for me is to pick up about 20 points a day. All right. And if I get anything over that, then that's a bonus. That's a plus. But you can make an easy $200 or simple $200 a day by simply scalping the way I'm getting ready to show you with the strategy. Now, the math portion of it is simple. 10 ticks or let's just say 10 points times 4 ticks in every point. That's 40 ticks, right? And then I'm sorry if I said the tick value size was $10 a tick on the NASDAQ. It is not. It's $5 a tick. I'm sorry about that. It's $5 a tick, right? So that's going to give you the $200 mark, all right? I'm thinking about another market in my mind, okay? But outside of that, that's $200 a day. If you do that times, 5 days a week, again, just from a side business standpoint, you could create a business, an extra business on the side by simply scalping part-time the future markets, in particular the NASDAQ. So that's $200. Every week you'll pick up an additional, say, $1,000. $200 on the NASDAQ is fairly easy to make. So that's going to roughly put you at $4,000 plus or minus a month. Okay, there's about 4.3 weeks per month in average out in the year. So maybe somewhere around the neighborhood about 4,000, maybe a little bit more than that a month. But still, that is a very good income to make as part-time income creating your own side business. Okay. So with that being said, now that's trading the E-minis. Now, if you're trading the micros, let's say for example, right, the micros trade a little bit less. Okay. So the NASDAQ E-mini trades at $5 a tick. The micro version of that trades 10 times less, so it's 50 cents a tick. Yeah, you may be saying, well, that's not much, but as a beginner trader, someone who's limited to capital, you could take a small amount of money and trade it to make a decent income daily, even part-time. All right, again, as a side hustle. Now, trading the micros, let's say we're going in for 10 points, right, times 4, okay, ticks in a point, that's 40 ticks. Okay, times 50 cents a tick, that's when they want to give you $20 per point, right? But if you trade 5 contracts, okay, on the micros, which you should be able to do, say for example, that's $100 per trade. If you do that just 2 times, because most times that or anyone that's part of the community, the Discord community, and if you're interested in joining the Discord, the link is down below in the description portion of the video. But I always talk about trying to pick up the minimum of 20 points, right? Or even if you trade the micros, take 2 trades. So either I'm going to take 1 trade and be done, max 2 trades. What I see a lot of people doing is they start to overtrade, and that is caused by revenge trading, where you have maybe enter into a trade, you positive, made money, you're green for the day, right? But then you end up taking a second trade, losing on the second trade, losing the amount of money that you made in profit on the first trade. So now you're in that cycle. Let me go for a third trade and then a fourth trade. Please, guys, do yourself the biggest favor. If you really want to get ahead in this business, 1 trade, if you're profitable in that, be done for the day if you met the goal. Okay. Again, here in this video, I'm talking about $200 a day to get you at $4,000 extra income a month. All right. So with that being said, it is very, very possible to be able to do this, but limit the number of trades that you're actually trading. Max 2 trades a day. Okay. If you continue putting yourself in that cycle, then you're going to eventually never be able to form any means of discipline for yourself, and you're going to be going through a vicious cycle time and time and time again. Now, with that said, again, 1 trade on the micros, trading 5 contracts, is going to give you $100 if you're looking to pick up 10 points. You do that 2 times, you're at the $200 mark, and that adds up every single day, compounding to at the end of the month, 30 days, then you're at roughly around $4,000 extra income as a side business doing this. So the strategy basically, it's very simple. It's not complex. Please just follow along with me. And what I'm trying to say is, I will highly recommend that anyone out there get your pen and pad, take notes, because this stuff is powerful and it works if you understand how the how the strategy actually works. Now, I'm a scalper. Okay, I'm not looking to hold trades, throughout the session or throughout multiple days. If you swing a position style trade, you probably can use the same strategy, but you're going to be looking at things from a higher standpoint. Okay, so without further ado, let's just jump into the strategy. First, like I said, master the key of market structure, all right, or the concept of market structure. If I'm looking at my higher base chart, and that's what you want to do, always start with your higher base chart, regardless of whatever you trade. If it's tick, volume, range, time-based charts, I trade range-based charts, okay? No rhyme or reason why I do so, other than the fact is that it's just cleaner to the eye to me, and I can see the setups a lot cleaner, okay? So I'm not trying to convert anyone over from trading time to range. It's just, if you give it a go and see if it works for you or not. If not, then continue doing what you're doing. But if you are already profitable and you have a strategy that works for you guys, I'm going to say this right now, and what you're doing is not broken, continue to do that as well. Anyone who's interested in looking for a strategy, then this may be something for you, or anyone out there who's just looking to maybe to learn something different. But anyways, market structure, making higher highs and higher lows. As long as we're bullish to the upside, we're looking for pullbacks to key areas of demand. If we are bullish, again, we're looking for pullbacks to key areas of demand. All demand is aggressive buying coming out an area or of a swing where the market broke structure to the upside. Okay, like right here, push up, pull back, boom, broke structure to the upside, it came back. It's aggressive buying in this area. Okay, made a high here, pushed, came back, pushed a little higher here, right? Didn't get the full close above, but then we do above this area, right, as it moves higher right here. So we have a demand zone resting right here and a demand zone resting right here, for example, right? So people always ask which one to look at to actually trade. Honestly, trading is all about probability, okay? You could trade either one of them, you trade both. The thing about it is you have to wait to see what happens in regards to price action. I always talk about Pay attention to price action as the market is retracing to your zone. The reason being because if you're interested in getting into this trade, look to see what's right above you. This is an area of supply. Right here, this is a supply zone. The market came down, supply area here. So you must understand the market is going to probably react once we hit demand and tap back into an area of supply right above us. Understand that, okay? Same thing right here. We get down here, what happens? Maybe you're interested in taking a trade, and then it comes back. Once you get into the trade, it comes back to this area of supply. It's going to have some reaction or rejection right there. Understand that. The key is being able to get into the trade at a precise entry point, and this is where the strategy kind of unfolds. Again, if we're bullish to the upside, look for key or high probability pullbacks to key areas of demand. Demand is aggressive buying. Supply is aggressive selling to the downside, okay? So I'm going to look for swings to where there is a high probability zone of demand at where I see structure breaks. Market broke structure above this area, pushed up, came back. Market broke structure above this area, pulls back. High probability demand zone here because we have an imbalance resting on the zone. If you don't know what I'm talking about, when I say imbalance, I basically mean the void, gap, back, resting at the zone, okay? And there is I basically understand that you must understand when the market breaks structure and it aggressively pushes to the upside real quick, okay? This order is resting back on the table more than likely, or on the order book resting right here, that the market, once it gets there, they're going to try to fill those orders, the remaining portion of them, and the market's probably going to react at it, and that's your opportunity to take a trade. Now, I'm not telling anyone to trade directly off of the 120 range chart. Don't get me wrong. I'm not saying to do so. What I'm telling you is that when you understand and follow the structure of the market, and then you can say, okay, we got a structure break above this area created by this area of demand right here to the upside, then go ahead and mark your zone. It's a high probability zone. After that, what you're going to do is move down to a lower base chart. I mark my first zone on my higher base chart, following structure, identifying structure breaks, drawing up the demand zone where there's aggressive buying at. As long as it's a high probability zone, I mark it up. Once I do that, it's a matter of just waiting to see when it's going to come back to the zone. But in the meantime, I'm going to go down to my lower base chart, which I'm going to show you right now, and look for a more precise entry point where there is a key high probability demand zone resting on the inside of the larger base chart demand zone that I drew up at first, okay? 120, higher base chart, draw it up, okay? Move down now to the lower base chart, which we're going to look at right now. As you can see now, I'm on a 24 range chart. What does that mean? Okay, it's a scale down chart in which I'm looking for a more precise entry point. That big box you see right here, okay, that is the same zone that we just marked up on the 120 range chart, okay? So we're waiting for the market to come back to it. In the meantime, while it's coming back and approaching the zone, I'm looking to see, is there a demand zone on the lower base chart, the 24 range, that's resting on the inside of the larger zone, okay? That's where we're going to draw our smaller zone. That's going to get us into a precise entry point, okay? There's one right here, okay? Yes, it's hard to see. I'll blow it up as much as I can for you right quick, and then move on right here. Why? The market pushed up, came back, and broke structure above this area here as it pushed higher right here. So there is a demand zone resting right here, okay, on the inside of our higher base 120 range zone. What does that give me? Multiple confirmation and confluence from two charts, okay? Higher base and lower base. That's pretty much all I need. But I also like to use the volume profile. I'm not going to go over that really too much today because you don't really need it. I don't need it to trade with, but it is a additional tool that kind of that lets me know and gives me more confluence as well, because I like to take my trades from the lower portion of a high volume area. Why? Because the market likes to react at lower volume areas and pull back to areas to where there's higher volume, okay? So it likes to reject lower volume areas at a high probability zone and push back to a mean area where there's high volume in, okay? So with all that said, you start to get all the ingredients that come together for a recipe for a great trade setup, okay? So the market comes back, we tap the higher base zone, we're looking to see, and by now, as it's retracing back, you should have already looked and see, is there a lower base high probability demand zone that's on the inside of the bigger box from the 120 range, okay? As it's coming back there, we see one right here. Go ahead and draw it up. As it approaches and hits or taps into the higher base 120 range zone, then we're waiting for it to come and tap that 24 range zone to get us into a more precise entry point. Now, the question is, okay, so where do I get into the trade at? Well, you can get in aggressively at 984 on the first candle break, first bullish candle and close to the upside, or wait for the break and close above, maybe around here at 955. Where's going to be your first takeout area? Okay, maybe should be up here around about 964. So you should be able to pick yourself up anywhere between, that's 947 up here to 964, maybe about 15 points there. And if you got in somewhere in this area here, maybe about 10 points there. Okay, on the NASDAQ futures. Again, trading the NASDAQ and picking up 10 points with one E-mini contract is going to give you that $200 pretty quick. Now, if you're trading the micros, you're going to have to bump the contract size up, but the micro contract sizes are smaller, so you're able to trade more contracts depending on the capital or the money you put into your brokerage account. The margins, you want to definitely check with your broker to see what the margin amounts are per instrument or contract, okay? Trade it. So, again, picking up 10 points here, boom, you're done on one little solid trade, back up to this area here. Now, I'm probably getting in around here at 948, and then I'm going to get out here at 964 with probably one contract, or if I'm trading with, say, two contracts, I'm going to close at one contract. If I'm closing at, say, four contracts, I'm going to close with three contracts, meaning I'm going to close majority of my contracts off, let one trail or run to see how much further it could go up. As you can see, it does come back here, but it never stops you out. Why? Because your stop will go on the back end here at 21,942. Give yourself some breathing room right there around about 21,939 is where to really put your stop at, and they never come there, and they continue pushing to the upside. So that means that remaining contract that you got trailing behind price, it continues to go up. And let's say you got out here at 964, it ran all the way up here to 998, almost at 21,300 round number level. So you could pick up a whole lot more in profit. Okay, so that's the thing about it, is trading multiple contracts. Even trading the micros, you can get out full on at the 5 contract minimum at 10 points, or close 4 out and then leave it one running. Okay, all right, if you want to do it that way. But either way, this is the simple strategy that I want to show you, and all we're doing is looking for multi-chart confluence, marking up our higher base chart first, moving down to the lower base chart next, looking for the zone within the zone. Once it taps both zones, one zone, the higher base first, then it gets to the small base zone. That's where we want to look for the rejection to go long. And as you see here, it comes back here for a second opportunity. Back to this area. Right back here to the high probability demand zone off the 120. So that was the second opportunity to where you could have taken that trade possibly. And at this point, because it already reached and tapped this area here, you could have taken it higher to fill some additional gaps going back to the upside. So once it came back here, my next step or approach would be were to look for an opportunity to scale that last contract out, maybe filling the gaps right here, or possibly back up in here as well. That's the purpose of having that trailing contract, to allow it to run. But that's all I want to share with you guys, is just kind of breaking this trade strategy down to let you know, if you're looking to create a side business and make some money, an additional few $1,000s a month, this is a great opportunity and way to be able to do so by just capitalizing on 10 points a day. If you're trading one contract on the E-mini, or capitalize on 2 small 10-point moves on the micros. That's it. All right, to be honest with you. But outside of that, that's all I have today. Anyone who's interested, as I said at the beginning of the video, and wants to become an elite channel supporter, the link is down in the description portion of the video, right below the Discord link. When you click on it, make sure to choose the second tier for $6.99. You say, well, what does that give you? It gives you the perks and rewards and means of the trade breakdowns. I post my entries and trades that I take over on the Discord, right? So then what I'll do is I'll go back and break those same trades down in further detail, discussing market structure, discussing stop loss placement, profit target areas, letting you know from my mindset why I took each individual trade, okay? And that helps a lot of people because, they're able to, as if like you're sitting right next to me, I'm able to break it down in detail so you can grasp those type setups. So you can take the same type setups when you see them occur, on the charts. So the market's always going to be doing something different. So always remember that it's never going to be doing the same thing. But when you see setups that make sense, you're going to want to take them. And I'm going to tell you right now, there's tons of those trade breakdown videos there already. I mean, tons of them that you can go and watch and rewatch and rewatch. It's very helpful information. But also you get the video playlist and the great video that I cover on market structure as well. So again, it's only $6.99. And what you're doing is supporting my efforts as not only a trader but a content creator just as well, by providing you with information and knowledgeable information, things that are of value that I've learned over the years. I'm a self-taught trader over the years, and I'm passing it along. Okay, that's what I'm doing. I'm passing it forward because I believe in helping individuals. That's the greatest means in life, is being able to share what you know, because someone else out there is maybe interested, and definitely is interested in learning, what you may have to share. Okay, so again, the link is down in the description portion of the video for anyone who's actually interested. I'll be breaking down my trades that I actually took today over to those that are part of the Elite Channel group. I'll be breaking those trades down like I have been sometime today, so look out for those for anyone who is an Elite Channel supporter. Thank you guys for, again, supporting my efforts. But outside of that, that's all I got. Okay. If you're not a current subscriber, please take the time to go ahead and sub by clicking on that subscribe button right now. Go ahead and do it. Make sure to turn your post notifications on by clicking the bell as soon as you click the subscribe button, so you do not miss any of the uploaded content when I post videos. Okay. Other than that, if you found value in today's video, give the strategy a try, back test it, forward test it. We got a great Discord community of people that are trading the same strategy. Lots of them have converted over and trading the range-based charts now because they see it now, okay? So what I'm trying to say is that it works. You just have to really put in the time, the effort to back test the strategy. If it doesn't work for you, and maybe you have your mind wrapped on something else, then move on. I tell people that all the time. If something else is working for you and better for you, stick with that. Okay, stick with it. But again, if you found value in today's video content, and you definitely appreciate the layout of the things I'm talking about, I would greatly appreciate it if you would drop a like by clicking on that thumbs up button. I appreciate it. Thank you. Take care, and see you in the next one.